barbell between the inflationary pressures and the deflationary pressures, where the inflation is driven by the Fed and central banks because they need that currency to inflate in order to pay off prior debt. Deflationary forces of technology that are fighting it. And eventually, this cannot keep up with the pace of this.
Welcome, James, to Insightful Principles. I'm glad that you're here on the show today. How's it going?
It's good. Really good to be here, Kevin, and I appreciate you having me. This looks like a great little setup you have here.
Oh, of course. Yeah, I'm definitely glad that Greg got a chance to connect us. You know, I know we initially met at the Bitcoin conference, and just great we're able to have this conversation. And to get things started, can you share your background with the audience that's learning about you for the first time?
Sure. So my name is James Lavish, and I come to the Bitcoin space having been an institutional investor for over 25 years. I started out on the floor of the New York Stock Exchange and worked my way, through the gambit to become a hedge fund manager and then a chief operating officer of a hedge fund private equity unit. So I've kind of done a lot in that world. But if you want the longer story, I'm happy to give it. But I started out, actually, I'm not sure if you know this, Kevin, but I started out as I was a hockey player in college. And so, it took me a long time to get here where I am. I'm happy that I'm in this space, but man, it's been a journey for sure. It's been circuitous at best.
Yeah, and speaking on that, I did get a chance to read a lot about your background and just the journey when you talk about going into professional sports with hockey, and then just kind of seeing your life turn around before your eyes and having to make that transition into the institutional world. Can you kind of just explain that transition and kind of just take us through those life events, so to speak, of how you had to make that transition and exactly what happened that made you have to, make that move into a different career path?
Yeah. It's hard, right, Kevin? Because people see that you went to Yale or whatever, you're on Wall Street, and they just automatically think entitled prick, right? I mean, truly. And I get it. And there's a ton of them on Wall Street and in the Ivy League schools. But, I come from a small town in upstate New York. I played ice hockey, like I was saying, and I worked my tail off. I'm not the smartest guy in the world. I just study really hard, and I learn. I'm always trying to learn, which I think is probably the key to success. It's not being the smartest guy. It's the one to be willing to have an open mind and see things a little bit differently, maybe. But anyway, so yeah, I was a hockey player and got to have the chance to go to Yale and play hockey for Yale. And while I was there, I thought, I'm going to get an education. Obviously, that was the whole point. They don't have athletic scholarships there, so it's a pretty high standard of who can get in and your test scores and grades and all that stuff. And so I did well enough that I was recruited, and right before I was going to Yale, that summer before, I got drafted by the Boston Bruins. And so I was intent on working my way. And in hockey, it's different. It's not like baseball or basketball or sometimes even football where you get drafted and you're gone. In hockey, they expect you to go to college for all 4 years. They don't expect you to leave unless you're playing junior hockey up in Canada. But I wasn't good enough. I wasn't big enough. I needed those 4 years, So, but I knew that I was going to get a good education and that I was going to I was headed toward that path. and I worked my tail off, and I lifted, and I ate just monumental amounts of food. I mean, whole pizzas in one sitting, and I gained a ton of muscle, and by the time I was a senior, everything was going great, Kevin. I mean, like, I was on that path. I was one of the top 10 goal scorers in the history of Yale, and my line had more goals and whole teams. Like, we were crushing it. We were doing so well, and just flying high on top of the world. And it was even in the Boston Globe that the GM, he had said that he's going to sign 2 players, and one of them was Brian Smolinski from Michigan State, and one of them was me, and so I was ready. I was ready to go. And then, as it happens, I'm playing against St. Lawrence, and it's kind of a Christmas game. We're going to go into the lull, and it's kind of quiet, and it was a regular game at home, just nothing big, and we were supposed to beat them. And I just get this breakout pass from behind the net, and I'm along the boards, but just far enough away from the boards that I'm kind of in the middle of the ice, And my left foot goes into a groove in the ice, like just that edge goes into a groove in the ice, and I get hit right at the same time, and boom, it was over. It blew out my knee, and it just in an instant, I was off the national team, which I was trying out for the Olympic team, and they have this, they have a national team where you play in tournaments, and they're going to select that team. I was off that team, and I tried to come back, and I tried to, continue playing. Boston let me go. I got picked up by New York and New York Rangers, and they went on to win the Stanley Cup that year without me. I mean, it was awful. It was awful. You think you have your whole life ahead of you, and you imagine it in a certain way, right? And you've worked literally, I've been working for that since I was 4 years old, but 10 years old is when I really was starting to have that dream of getting to that level, when I saw the U.S. team win the Olympics back in 1980, and which dates me, shows you how old I am. And so, you have this vision, and in an instant it's over, and it's heartbreaking. It was awful. And I was in New York. I had no money. I didn't have a job. I didn't know what I was going to do. I had no backup plan except getting a good education, which was great, but I had no clue what I was going to do. And I had debt, I had college loans and, credit card debt, because I thought, well, I'm going to sign this contract. I'll pay that off and everything will be great. But it didn't happen that way. And so there I was in New York, and penniless, sleeping on friends' sofas and trying to figure out what the hell I was going to do. And I met some guys who were players, hockey players at different schools that I had played against, and I had known them, playing against them the years before. And they were like, "Hey, come see what we do," because playing hockey, you're doing something that can translate pretty well to being a trader on Wall Street. And I didn't understand it at first. I was like, I don't understand what you mean. I'm thinking investment banking. I don't know. I don't know that world. Like I said, I didn't come from that world. I came from Schenectady and Albany, New York. Like, I didn't know what Wall Street was. I saw it in the movie, And so, but I got invited to interview at this place, and they said, "You're really good at math. I think that you would do well here. So why don't you come and trade with us on the floor of the New York Stock Exchange?" And so that's what I did. My first job was on the floor of the New York Stock Exchange, trading something that's called ADR arbitrage, which it sounds super complex, but all it is, it's American depository receipts. And so you're taking foreign shares and you're trading them on the New York Stock Exchange. You have to translate them, with the currency, and then there's a stamp tax. You put them in a basket. You just do the calculation. Whoever does the calculation fastest gets the trade, and you make a little bit of a spread, So, and that was my first job, out of the, fire into the skillet. So, as you say.
Yeah, and I think just hearing the journey of what it takes mentally to just have your whole um, life and your career just change in a complete different direction. It's like sometimes you have a plan for your life, and then God comes around and just says, "No, this is the direction I want you to go in." That's what I think about a lot when I hear your story, and I just think it's amazing to see the experience that you've been able to develop on the institutional investing side and the risk management. And I really wanted to just get your mind frame of, what is the biggest difference that you have seen when you think about your experience and your time that you had on Wall Street, working with different hedge funds and private equity, and now being in the Bitcoin space. What are some of the differences or similarities that you've seen between those two different aspects when it comes to money?
Well, I mean, when I was on Wall Street, you start out in this big pool of all these traders and people in these huge firms, and I kept like sizing down. I went from a huge firm to a hedge fund within a huge firm, and then a hedge fund that grew to be huge, and then my own hedge fund, and then in this a hedge fund private equity unit within a larger fund again, but a small family, a small team, and so what I found was there are some really smart people on Wall Street. I mean, I've said some snarky things, but there are some really smart people there, truly. But by and large, one of the things I have found is that in this space, in the Bitcoin space in particular, I am meeting some of the most intelligent people I have ever met in my life. And so if you think about that, I've been on Wall Street for 25 plus years, right? I've met thousands of people. I can open up my phone and have a Rolodex of thousands and thousands of people. And this is nothing against them, because there are some really smart people there. I've met some of the smartest people ever there too. But there are so many smart people in this space. And the difference is they're driven by a passion to help bring this protocol into the world in a way that can help people who need it the most. It's there's this thing that it's an eat what you kill kind of mentality and attitude on Wall Street, and they say it's a meritocracy. That's bullshit. It's not a meritocracy. I mean, look how I got in. I got in through connections, because I knew people through the school I went to. I wasn't some entitled kid who came from a trust fund, but I knew people who were connected, and so I got in that way. And it continues all the way through your career that way. If you're in that world, sure, take advantage of it. Why not? But don't step on people's necks to get there, right? And so I've seen both sides, and by and large, the passion and the openness and the generosity of the people in this space has absolutely astounded me. And it's been awesome to be here.
And I think Greg hit on it a lot when we had our conversation about one thing he notices about Wall Street is that there's just a lot of takers, and like you said, it is a lot of intellectual people on the Wall Street side. But when you think about just the Bitcoin community, everyone is just givers, and I look at it more of when I first was introduced to Bitcoin back in like 2019, 2020. Which I'm pretty early like yourself. I know I've heard you say before, you've really only have learned about this within a year or so ago. The biggest thing that I learned is that it's really making me have a better understanding of our monetary system. Understanding how economics works, how central banking works, how inflation, how does debt, how does all this really correlate within an economy. And it's really gave me a better appreciation of understanding that Bitcoin, it solves many problems that maybe some people are aware of, but some people haven't really came to just the light of the understanding of it. And I think the biggest challenge with our school systems is it isn't taught. In college I wasn't taught this. I wasn't taught in high school, a lot of these different aspects of finance and economics throughout our economy. These are kind of things you just got to have conversations with people and just kind of just self-education. So I actually wanted to, get your perspective on, everything that you're doing with, Looking Glass Education and also your Substack information, this newsletter. When you think about the equality of opportunity and providing people access to education that helps them understand more clearly how the financial world works, can you kind of explain what that means to you and just the mission of wanting to go down this journey to just, educate people?
Sure. I mean, you're right. First of all, you're absolutely right. We don't learn this stuff. I didn't recognize that until I had gotten into this financial world, and I didn't recognize how. What a shame that was that I could walk into that situation, not really know much truly about finance and how the world works financially. And I learned it along the way, of course, but my kids didn't know it. And so from a young age, I started telling them and talking to them about money and how much it's almost like a taboo thing, right? I don't know about your parents, but my parents never talked about money. I had to needle my mom to get an idea of what my dad made, because I had no clue. I was like, well, what does he make to afford this lifestyle? What do I need to make to afford that lifestyle? Where does it all fit in? I had no idea, except I knew I wanted to make more money, but I didn't know how much. I didn't know how to do it. And we were told, I'm Gen X, right? So we were told, all right, listen, go work for a company and then stay with that company for 25, 35, 40 years. You'll get seniority in that company. And by the time that you're ready to retire, you'll have a pension. And with that pension, you'll be able to live for the rest of your life without having to work for it. So you're going to work until you're 65 years old, and then you'll have a pension, you'll be done, and and that's the trade-off, and you'll be taken care of. Again, absolute bullshit. There are no pensions anymore, So I get into the workforce, I'm thinking, oh man, I'm jumping around too much. I've went from this company to that company, and I'm not putting money away. I have to keep tucking away my own 401k and IRA and figure it out myself. And, that's not available for anybody anymore, right? And by the time you retire, you're not going to have Social Security. That's evaporating, right? That's just gone. That's not going to be there, right? We just have to understand that, and you have to accept it. They're taking money out of every single paycheck that you get, every single dollar you make, and they're putting it into a system that's just going to go away. Wrong. What a terrible, a terrible policy, right? But anyways, sorry, I digress. Back to center. The point is that, yeah, we weren't taught about this. So now when I realized, look, I got into Twitter, maybe September, October of last year, and I didn't really have any followers. I didn't have a network on there. My wife is an author, and so I had a bunch of authors that I followed, and I would retweet stuff that she was saying because she had books that were coming out or whatever, but I didn't really have a network there. But then I started to meet people, and I started to realize that the information I have, my knowledge and my experience, is actually pretty valuable to all you guys who haven't done it before, right? Because if you haven't sat in that risk chair, if you haven't taken those positions and stomached those positions through these market cycles, you can't really understand what it feels like. And when you're in the heat of the moment, what to do and what decision to make without overthinking it, right? And you'll hear Greg say this ad nauseum. Don't overthink it. You haven't sat in a risk chair. But it's true. It's absolutely true. Now, what does that mean? Well, it means that I've got something that I can share with you guys that may be able to help you, But there's a problem. There's a barrier there, right? Because everything that's set up in the financial world, it has this lingo that you're not exposed to. And it's different from every other lingo in the world, right? You're talking about CPI and yield curves and yield curve inversion and control. And you're talking about interest rate arbitrage and interest rate parity and the FX rates. And what does this all mean, right? So I could say something in a sentence and have somebody look at me and say, I have no idea what you just said, none at all. But in the reality is, you would understand every single concept underneath that if I took time and explained what I was saying with each of those terms, right? So the point of what happened was I started this newsletter called The Informationist, and you've seen it, right? And I just decided to take some of these super complicated subjects and boil them down into simplicity for people that you could read in like 5 or 10 minutes on a Sunday morning. Just chill out, get your coffee. It's sitting there waiting for you. And you just go through and you understand now what CPI is, what inflation is, and how it works, you know? But it's not that difficult, right? I mean, the concepts are not that hard if you are taught in a way that relates to what you know and where you are. And this is not for people, you know, like this is for everybody. It's for the housewife who has never had a job but always wanted one and is super smart but has not had that opportunity but wants to invest or wants to understand this better. It's for the doctor who has this high level of intelligence and wants to invest but has not been taught anything in finance. It's for the 22-year-old kid who's drowning in student loans at a community college, you know, even at one, you know, or a 4-year college, or is it someone who's at a 2-year college and has not been taught this stuff but wants to learn it and knows that there's something there, because you know that there's something out there. You just don't know what it is, and you know that these guys are doing something, and I don't understand what they're doing, but I know there's something there that I should understand, right? And so my wife says this all the time. She's like, you know, when I talk about things that happen on Wall Street or things that happen at you know, how I got into Yale, all that stuff, and with hockey and whatever, she's like, I knew, because she's from here. She's from Las Vegas, right? Born and raised. And, you know, not the best school system in the world. That's not, you know, that's not a secret. You know, their public school system here kind of sucks. It's too transient, right? Whatever. But the point is, she goes, I knew there was something there that I just didn't know what it was. And so there's nothing I can do. And about Wall Street and investment banking and hedge funds, you know, once I explained to her what was going on there, she was like, oh, that makes so much sense. I just, you know, I wish I had been taught that. And that's why I started that newsletter. And so flash forward, I meet Greg, and he's like, hey, you know, I'm doing this thing that's called Looking Glass, and it's an educational platform, and they hadn't launched yet. He's like, and we're looking for some advisors and people who could come in and kind of help steer. And with your experience, you know, you could bring something here that would help us get a little bit deeper on some of these subjects and help guide, you know, that material to the people we're trying to reach, which is exactly the same demographic that I just laid out. It's the exact same set of people. But in that case, you go to the website and it's actually set up like a course, the core of it, and you sign up for the course, and you can take each module and learn about money, learn about the history of money, learn about how money is treated in our society, learn about inflation, learn about the interest rates, and you just keep going deeper and deeper. And at the end of it, we're not doing something where we say, you know, Bitcoin's a solution, here's why. But at the end of it, you go, oh, no wonder Bitcoin's a solution. That makes so much sense. So it's not like we're trying to, you know, shove it down your throat or, you know, bind you to that idea. We just say, here's everything. And what do you think? And you're like, well, of course. That makes so much sense. So that's kind of the idea of that. And those guys are doing great, you know. You've got Seb Bunny and Dasby and Dahlia Plott, and of course Greg, you know, and we've got a guy behind the scenes, Max, Pleb Music on Twitter. He's awesome. He makes sure we're all in line, you know. And then we've got this physician, actually not a physician. He's a trauma surgeon from Wisconsin, Jason Sansoni, and he's another brilliant guy who knows that, there's something out there, and he's been learning it, and he is building a course within there to help people like him, who are smart, like you, may not have that experience that we're talking about, but want it. So that's what it is.
Yeah, and that's so true. I think everything that you're doing with Looking Glass, the whole team, is very needed because, like you said, in order for someone to even understand the solution that Bitcoin provides, just the technology and the network, having a better understanding of it, I think it's vitally important to talk about the problems with our system currently. And, for myself, when I first started learning about Bitcoin, for me, it was just trying to dissect as many podcasts as I can, read the Bitcoin Standard, looked at books written by Jeff Booth, The Price of Tomorrow, just understanding, their viewpoints and really, even when I read a lot of their material, they're not trying to say, okay, like you mentioned, like they're not trying to just say Bitcoin is the solution. They want you to kind of go through a discovery to understand for yourself, okay, I understand the problem and I see why Bitcoin provides that solution. And I think for me, Jeff Booth, one thing that really stands out to me, I mean, the guy is just light years ahead as far as how he thinks about, he looks at it from a technology standpoint, but I've heard you talked about this before about, the barbell of inflationary and deflationary and how the central banking system, they want an inflationary environment, so to speak, because it's, debasing the currency, it's reducing the purchasing power of the citizens, so therefore they actually end up making more money off of just the debt that they're issuing throughout the economy. And with a deflationary environment, it doesn't help them, so they don't want deflation. They almost they want to keep this debt spiral going. That's the only way they're going to be able to solve their debt problem. So I wanted to get your viewpoint on that, and just, how do you think about that, and how Jeff Booth, looks at that from an deflationary standpoint?
Yeah, and so that's actually great. That's a great point. I mean, Jeff is one of the guys who orange pilled me. I know him now. We're friends. He's a great guy. He orange pilled me on one of his videos. So maybe we'll go back to how I got into Bitcoin, because this whole the last 15 years I've been working with this hedge fund private equity unit. I've been the chief operating officer, risk manager there, and it's been great, but for 10 years, the last 10 years, my wife and I lived in separate cities, right? So we went back and forth depending on when we had the kids. My kids were going off to college in 2020, but we were not going to leave kids, right? So and being an author, she could work anywhere, so we went back and forth. So then the pandemic hits, and we get locked down in separate cities for 100 days. And so we were like, okay, what are we going to do here? This is just not going to work anymore. Like, we realized we were tired, tired of that lifestyle. And so my daughter was heading off. She was heading off to college, and, my son was already in college. So I was like, you know what? I'm just going to pack up my car and come out there and we'll figure it out. Okay, so I'm here. It's a few months in, and my firm, you can see my firm is in Dallas, right? And in Fort Worth, actually. And they're like, okay, it's time for everybody to come back to the office. And I'm sitting out here in Las Vegas, and I had just gotten back to my wife. I'm like, we're going to have to figure this out, because I can't do this anymore. And so, talked to my managing partner, and we just decided, okay, we'll how about you train a few people to take your position, because I had a lot of different duties, and then, we'll work it out. And so flash forward about 6 or 7 months into it, I'm trying to figure out what I'm going to do. I'm talking to a lot of people, and I'm not sure. I mean, I still want to do things. I want to work. I want to, I want to use my time wisely, but I wasn't sure what to do. Well, lo and behold, wouldn't it be a kid who tells me, hey, Dad, my son, who's now a junior in college, he says, hey, Dad, you got to look back into this crypto thing. Okay, so what does that mean? Well, I had looked into Bitcoin years ago, but I was on Wall Street. I was in this fund. It was 2018, and I had some discretionary capital that I want to invest, and I want to do something risky. I want to go out on the risk curve a little bit and do something that is not normal for my portfolio. And a number of things came up, and one of them was Bitcoin. And so I did what you would do if you're on Wall Street and you're in a hedge fund and you know all these people on the street. Well, I called a couple of the tech analysts that I know, and really smart guys, derivatives analysts, and I said, tell me about this Bitcoin thing. And, they gave me that pat answer of, oh, no, it's not worth anything. There's no underlying value in it. It's a Ponzi scheme. Stay away from it. And what do you think I did? I stayed away from it. I mean, the stupidest decision I have ever made in my financial career. I ignored it. And so it was at like $3,500, and I put my money elsewhere into something risky, and then some of the other money into something that was not risky, was safe, a safe oil and gas investment. Well, the oil and gas investment ends up the guys who I gave the money to, the partners were crooks. So they stole all the money, and that investment went to zero. Now the other investment's still doing well. I can't divulge what it is, but it's doing fine, But I missed Bitcoin. Okay, now flash forward, and my son says, "Dad, you got to look back into this crypto thing, And he's talking about Ethereum and Solana and Cardano, and so I buy a little bit of Ethereum and I buy some Cardano, and I start doing some research, and I go, holy shit, what do I own here? And so I immediately move all my money into Bitcoin. I'm like, get it out of. I don't know what is going on here, but it's not decentralized, and I can't trust it. I don't understand what they think they're going to do with this. The fees were so high on Ethereum at the time. Cardano was just like, do they even have a customer? Is anybody using it? Like, it was just crazy. So anyway, not to go down that route. But the point is that I realized pretty quickly that this is where I wanted to be. Well, one of the keys there, Kevin, was I was watching this video. I watched Michael Saylor videos, and I watched Preston Pish videos and Robert Breedlove, and I was watching these videos, and I was like, okay. And then I watched this video with Jeff Booth, and he's talking to Pump. Okay, now I've heard all this stuff about Bitcoin's decentralized, it's anti-inflationary, it's immutable, it's separate from every other cryptocurrency out there, and it stands alone. I got all of that. I understand it all, and I was like, okay, this is really digital gold, but better, right? Digital gold 2.0, right? So I understood all that. But then I sit down and I listen to this Pomp and Jeff Booth podcast, and I have my computer. I'm on the edge of my bed, and I'm watching this on the laptop, and it's I think it's right after dinner time, and I'm like, I said to my wife, I said, come here, you've got to see this. And she's like, what? So I rewound it. I had watched it once. I rewound it, and we sat down on the edge of our bed and watched the whole thing through again. So, you ever hear, you hear about the editors who get a book that's, and it's something they pulled out of the slush pile, they call it, when they're like, okay, I'll look at this book, and they pick it up and they open it up and they're sitting on the side of the bed. And I remember somebody telling me this story about, and I think it was Lee Child's book, where It was The Killing Floor, and they have a whole series on it now on I don't know, Netflix or one of those, HBO. I can't remember which one, but anyways, so it was on Amazon. That's what it is. But anyways, so the editor gets his book. He opens up the first page, and it's you're flipping through pages because it's not a book, right? It's just a stack of paper, and he's flipping through the pages, and he had taken off one shoe and one sock. He finished the book before taking off the other shoe and other sock, right? So that that book was good, right? Okay, that's what it felt like when I was watching this podcast with Jeff Booth, and my wife was like, at the end of the podcast, so we understand now about the deflationary forces of the technology, that's being created in this world, and how that naturally makes everything more efficient, that enables you to do more work with less energy, right? And it simply translates to a deflationary mechanism, right? So if I put in the same amount of work, we create more product for the same amount of energy, which is translated to more product for the same amount of money, right? So because energy is money, and money is stored energy, right? That's all it is. So I'm thinking, okay, and then the inflationary pressures, like you just said, and you laid it out perfectly. That's exactly what it is. It's a barbell between the inflationary pressures and the deflationary pressures, where the inflation is driven by the Fed and central banks because they need that currency to inflate in order to pay off prior debt. Like you said it perfectly. It's exactly what they're doing, right? Yet you have these deflationary forces of technology that are fighting it. And eventually this cannot keep up with the pace of this, right? Moore's law. It's that the number of transistors doubles every 2 years, right? So that's the law. But what the point of it is that technology, the efficiency of technology doubles, right, every 2 years. So if you think about that, this becomes so much more powerful than this, right? And at some point, they will clash, and there will be a breakdown. And we're heading toward that direction. And so when I understood that, and we were sitting there listening to this in Jeff's podcast, at the end of the podcast, my wife looks at me and she goes, "Do we own any Bitcoin?" So I knew right then, yeah, she gets it. We get it. And and that was a pretty powerful driving force for me to dive headfirst, both feet, everything into this space and say, this is where I want to be spending my energy, and this is where I want to be working for the remainder of my career.
Yeah, and what this really reminds me of is, in Salvador Amus's The Bitcoin Standard book, he talks about this concept of time preference where, we all are trying to make sure that we are maintaining, we're storing our wealth that is going to hold its value, that's going to increase over time, and that reduces our time preference where we can focus on other things that makes us productive. So he highlights, the comparison between two people like fishing, and the person that takes the time in their day to say, okay, I'm going to focus on trying to build a more productive fishing rod. They can, so to speak, catch more fish in a less amount of time than the other person that has a higher time preference, that they're out there all day with the same fishing rod. They're not taking the time to, look at ways of how they can be more productive. So the concept of time preference and storing your wealth into something that is going to hold the value over time, it creates a civilization that's more productive, and it creates a more thriving economy where we don't have all the disparities that we see now with the wealth gap, and when we just look across the board with all of the different manipulation with interest rates and CPI, the consumer price index, I thought time preference for me, that was my biggest like, when I really sat down and read about that, I'm like, this is very eye opening. And then Jeff Booth, like you said, that podcast was outstanding. But I actually wanted to get your thoughts on that as far as how you look at Bitcoin lowering someone's time preference instead of storing their value in like fiat currency, which is going to actually higher the time preference, over time.
Yeah, I mean, well, you know it because with look with fiat currency, right? With the U.S. dollar or God forbid the Venezuelan dollar, if you're there, your time preference it increases, right? So your time preference this last 2 years has it's been very high, meaning that you really care about how much time you hold that money, right? And so the reason is you make the money, and you just said it, you make the money, and in a year it's worth 8% less, according to the CPI, or 8.5%, according to the CPI. We know it's more like 10, 12, 15%, right? I mean, if you read my newsletter, you know how they can manipulate that basket to make it look it's not that bad, but yes, it is. And so but that's because of the inflation. Simple as that. It's just an extra tax, right? And they want you to keep spending that money because if you sit on it, well, that's not going to help the economy, and that's not going to generate tax receipts. And that means that the GDP does not, is not at the level where they can tax it in order to pay off that debt. They need everything to keep inflating, right? You make the money, you spend the money, everything keeps inflating, 2 to 3%, whatever that means. How they pick that number? I mean, that's going to change. So, but in a Bitcoin standard, so if and when eventually, I may not see it in my lifetime, you may see it in yours, but if and when we move to that Bitcoin standard where there's no more inflation on monetary policy, it's not manipulated to inflate, well, then time preference, it just evaporates because you expend your energy, right? I mean, think about it this way. This is what really got me to, when Michael Saylor talks about expending energy, and then you put it all together with Saif Dean and Jeff Booth, and you wrap it all together. Well, you expend energy, whether you're working for a company or working for yourself, and you're creating a product. Let's say you're working for a company. You help that company create that product. Well, that company then takes that product and sells it, right? And makes a margin on that. And from that margin, they pay you a piece of that. That's kind of how it works, right? And so expending that energy to help them create this thing that they sell, you get money. So what is that? Well, money is you being able to store your energy. Now, you take that money and you buy the necessities. And if you have anything left over, you save it, right? And that'll allow you to buy the things that you don't necessarily need today, but you may want, a house with a yard, or, a vacation for you and your family, or another pair of running shoes. So you can have one that you like to go out in and one you like to work out in, it's important for you to be able to have those choices and to be able to have a lifestyle that you've worked hard to create, right? So in a Bitcoin standard, you're not worried about, well, if I don't buy those sneakers today, they're going to be out of my price range next year because I only have $100, but they're going to be $125 next year. I know it. So I better buy them today. Well, that means that you can't buy this, or that you have to give up some food or something in order to do that. So it forces you to make a choice that you shouldn't have to make because of time preference, because of high time preference. Whereas if you are storing that energy that you worked hard, you've worked overtime. How about those people the last couple of years who have worked their asses off, right? They've got 2 jobs. Why is the unemployment at 3.5%? I think it's because people have 2 and 3 jobs because they have to pay for these things. And they want to be able to buy that, extra pair of sneakers or running shoes because they don't want to wear the sweaty ones when they go out. They want to have a nice pair that they can wear, Well, that's fair. They should be able to do that. But they can't do it unless they have 2 or 3 jobs, right? So the point is that the last couple of years, people have been struggling to make sure that they're making enough money in order to pay for those things that they want. And now you've got gas that's in California. The gas prices are above the federal minimum wage limit, right? So let's say this. You live in California and, the California minimum wage is higher than it is here. But let's say that you make minimum wage of $14 in California and then gas is over $7. Well, if you drive 30 minutes to work and 30 minutes home, let's say that you burn a couple of gallons of gas each way. Well, you had to work 2 full hours just to pay for the gas to get to and from work. That's inflation. And then you get home, well, how about the lunch that you had to buy, or make? Well, food prices are up, so there's a couple of hours, right? At least 1 hour of work, maybe 1.5, just to get a decent lunch, right? So there, you take that out. Then your housing prices, all the rents have gone up. Why? Because we had billions and billions and billions, hundreds of trillions of dollars pour into the housing market through BlackRock and through Berkshire Hathaway because the money just funneled right into that Cantillon effect, right, where it goes right to the entities that are closest to the banks. They buy up all the houses. The houses go up in value, which means that the taxes go up in value, which means that, and all of the expenses to fix the house, to maintain the house, they all go up. So what happens? They raise the rent to pay for all that, right? And who suffers that? The guy who's making the $14 an hour. So now his rent is doubled, right? You see how it all works, right? People don't think about this, but that's exactly what's happening. They feel it. They see it's happening around them. Like, God, my grocery bill was $230. This used to cost $120. Man, there goes another week, of discretionary earnings. I don't have any discretionary earnings anymore. Cancel a Netflix. Cancel ESPN. I can't do it. And about that game that I was going to take you to, son, I can't afford it. And sorry, honey, we can't go out to dinner every week anymore. That sucks. It's wrong. And I'm off my soapbox. Sorry.
No. Hey, you broke it down perfectly because, like you said, it really just highlights the issues of we work so hard for our money. All of the energy that we're putting into that activity, we have to get more creative on, okay, how can I store my money in an asset that is, going to hold its value over time and just maintain your purchasing power, if not increase it. And I think about when you think about Bitcoin, it really provides that alternative of just the system that we're in here throughout America and many other places, like you mentioned in Venezuela and other countries that, deal with debasement of their currency. And, I actually wanted to get your thoughts on as far as when we think about Bitcoin, being a store of value, a unit of account and a median of exchange, how far off are we? I know it's probably hard to predict, from a time standpoint, but, when do you see that we'll be in a world where it's really viewed as a global reserve currency or an asset, and it really has those, is viewed from those characteristics amongst, people at an institutional level and even just from a retail and investing side?
Yeah, that's a couple of questions. The first one is, I think it happens in stages, right? So the first thing that we need to happen, Kevin, is we need Wall Street and institutional investors to understand this as a separate asset first. Some of them do, but they really need to understand it widely and, so not just broadly, but deeply, like really get how it's different from Ethereum, how it's different from Solana, how it's different from name your any other coin, right? And once they understand that, well, then you're going to have what let's put it this way. The top 5 asset managers in this country, okay? The top 5 are let me think about it. It's Fidelity, it's BlackRock. Yeah, it's BlackRock, Fidelity, Morgan Stanley, Vanguard, State Street, right? So you put those 5 together, right? It goes BlackRock, Vanguard, Fidelity, State Street, Morgan Stanley. You put those 5, that's $30 trillion of assets under management. $30 trillion. Now, those guys are managing money for people who have their retirement funds with them, especially Fidelity and Vanguard. They're managing mutual funds. They're managing so much money for people. They're managing the people's money. Okay? So when I hear people say, "Oh, we don't need institutions. We don't need that." You need the institutions if you want this to start out as an investment and a store of value as a separate asset, so you can take out that volatility. Well, what's going to happen is when you have, of all the money in the world of investment assets, we can walk through it. You've got, as of last fall, according to BIS and IMF, you had $120 trillion of stocks, $140 trillion of bonds, $300 trillion of real estate. Those are all down a little bit now, but just for argument's sake, you've got about $30 trillion of art and collectibles, another $10 trillion in gold, which some of that is not investment. It's jewelry, and so it's not really something that's used as an exchange. But let's just call it $600 trillion, okay, of investment assets. Those bonds are like sovereign bonds, corporate debt, anything that you can use as an investment. So $600 trillion. Then you've got about $130 trillion of cash and marketable securities. Like think of checking accounts and money market accounts, right? So $730 trillion. Now, I just told you that 5 firms control 30 trillion of that. That's insanity. Now, just what it is, okay? Like the consolidated wealth, like you can't even imagine. But that's the power of those firms. Let's just say that they start accumulating Bitcoin as a separate asset class, one of a store of value to diversify their assets. Let's just say that they take down 1%. Okay. Well, if Fidelity, Vanguard, State Street, BlackRock, they all start buying Bitcoin, what do you think the thousands of other asset management firms across the world are going to do? They're going to accumulate it as well. So at some point, you'll get everybody to accumulate about 1% of Bitcoin as a separate asset class. Well, 1% of $730 trillion, right, is $7.3 trillion, which is a Bitcoin that's around $350,000, right? So think about that. And then it becomes, it grows into a 2% and a 3%. Well, then you're looking at a $500,000 or $1 million Bitcoin. But what happens is the volatility will dampen quite a bit, and you'll have people start trusting that it's a store of value. And so I don't know if that happens at $250,000, if it happens at $500,000, but eventually it becomes an asset that can be trusted on a shorter timeline of volatility. I trust it long term because volatility and in the long term in an appreciating asset is good. You want the volatility. That's okay. So as long as it's an appreciating asset, which we know Bitcoin is, if you look at every 4-year period, it appreciates. So, okay, so that's the first step. But I think, honestly, Kevin, I think that what we're seeing around the world and what's going on right now with U.S. Treasuries, right? The U.S. Treasuries, they have, as a reserve asset for other countries, it's fallen from, I think, $76 trillion to $56 trillion worth, and in a short period of time over the last number of years. And that just shows you that the U.S. Treasury is losing its status as the global reserve asset, right? Why is it happening? Well, dollars are so expensive. Okay, you can't buy U.S. Treasuries with your currency because they're too expensive. You've got countries like Japan who are executing yield curve control. And for your listeners, if you don't understand what that is, I wrote something about it on my newsletter. Just it's super short. It'll lay it out for you. But the point is that they have no choice but to let U.S. Treasuries roll off their balance sheet in order to hold the yen from falling too much against the dollar, right? So selling U.S. Treasuries, buying yen, right? Selling U.S. dollars, buying yen will help that currency, right? Well, we're seeing that happen around the world. Why? Well, if you have adversaries like Russia who used to own U.S. Treasuries, they don't anymore. They got rid of all of them. I think they knew that exactly what our playbook was going to be when they invaded Ukraine. Well, we shut off their SWIFT system, okay? And now we're threatening to block payments on their debt to make them default. Who's going to trust the U.S. that holding U.S. Treasuries is going to be a safe thing, a safe asset for them to depend on as a base for their currency? There's a lot of nations who are semi-friendly with the United States but don't trust us. And so I think that that's a problem, It's our own fault. And if the U.S. loses that U.S. Treasury as a global reserve asset, that's not going to be good for the U.S. So I think that they, eventually, I don't know if this happens in 3 years, 5 years, 20 years. This is a slow-moving train wreck that we're watching, right? I mean, it's not happening overnight. For people who are calling for it happening next quarter, it's not happening next quarter. It's not. I mean, it's just not. I've been doing this for far too long, and I don't profess to be, to be able to see into the future. I just know that, man, these things take time. This is not like the housing crisis. This is a much larger thing. But anyways, the point is that at some point, gold or Bitcoin will become, or maybe a mix of them, dual reserve assets, and then eventually Bitcoin will be the global reserve asset. I do believe that the dollar will be at least one of the global reserve currencies. There will be multiple, I think, whether it's the ruble and the yuan or whatever happens, because the ruble is backed by oil, and that's pretty important right now, because oil and gas, it seems, is pretty important in Germany, and suddenly they realize, oh yeah, I guess we may have to pay for our gas in rubles because it's an asset that they need. That's their own fault. You should have gone nuclear, but that's another discussion. So, but anyways, the point is that there will be a checking and a savings account, global reserve currency, U.S. dollar, and some others. And I do believe the U.S. dollar does survive, and it becomes that. And a whole lot of other currencies kind of melt into it. But then you're going to have that reserve asset, and that's Bitcoin, and that's what you're talking about. But that's far down the road in my mind. In my opinion, that does not happen in the next 5 or 10 years. That takes a long time, truly. So.
Yeah, that's a great point. I think that this is just going to be a gradual thing that over time we'll start to possibly see some unraveling when we talk about the dollar system and Bitcoin being viewed as a global reserve asset. And I think you made a great point of just the potential that Bitcoin has to the total addressable market when you look at all of the different financial instruments, the trillions of dollars is out there. Even if it's a 3% or even a 1% allocation, I can see how you're getting to that 350,000 with the price. And it's crazy. It almost seems as if our dollar system, it seems sometimes that our policies, they almost use it as economic warfare. When you think about just kicking Russia off the Swiss system, and I think that the dollar, they do have. It's strange. It's like, even though we know that the dollar is going to devalue and that this is going to take some time to unravel, it has a lot of power globally as far as when we think about the amount of control that America has, and how reliable a lot of these other countries are on the strengthening of the dollar. So it's just very interesting times. And I guess just the last thing here I wanted to ask you, James, is we're seeing a lot of volatility across a lot of different asset classes, whether we're looking into equity, the debt, the commodity, or even just within the crypto market. In general, it's really nowhere to hide. And I would love to get your perspective on, just from a risk management standpoint, whatever you can disclose. I know probably some investments are private, but from an asset allocation standpoint, how are you kind of balancing your risk in this current environment that we're in now with the economy?
Well, I'm a little bit different because I have a lot of money tied up in this fund that I came from. That's mostly long equities. There's really little I can do about that. But for the remainder, I've got what I can control. I've got it spread out between real estate, gold, and Bitcoin, and and then of course I have some private equity investment and venture capital. So long equities, I would not recommend being long equities right now. It's just not. None of this is. Here's the thing. Let's back up. I can't advise anybody on your channel. So anybody who's listening, you've got to sit down with an advisor who can see everything that's in your portfolio and everything that you have, all your debts, all your assets, and line them all up together, understand what your income is and where it's going. And then you can make decisions. You can't make decisions off of these little snippets. It's just not right. You have to know the whole picture in order to understand what to do. Now, that being said, personally, my picture is I've got private equity, I've got venture capital, I've got long equities that there's nothing I can do about. I've got some gold, I've got some Bitcoin, and of course real estate. I've got this house. But when you net it all out, if I didn't have that long equity portfolio, I would be sitting, honestly, because we're in such a crazy environment right now, and I am pretty bearish on the market because I think the Fed is going to continue to misstep. I think the Fed is going to, they've said it over and over again. And I said this, I was on Preston Pish's broadcast last night, on his podcast last night. And I said it last night. Look, this is a Fed. Powell has admitted that they're reactionary. They're looking at information. Now, the information is old, and they're looking at old information, and he's reacting to that information. So it's like he's reacting from information that's so stale, that by the time he reacts to it, it's like swerving after you've already gone off the cliff, Now, I don't think we're going to head off the cliff, but I do think that we're going to have a little bit of a crash. I do think that we're going to, I don't know for sure. They could pivot. If they pivot, the market will soar. They jawbone today about, well, maybe the third quarter will pause. Maybe September we might hit the pause button on the quantitative tightening. Really? Holy crap. We're not even close to net zero on interest rates versus the inflation rate. We're not even close. And they're already talking about it because the market's selling off. And So if you have a whole bunch of stuff that you're not sure what to do with, well, I would recommend that if you have discretionary capital, you don't have a lot of debts, you have enough income, everything's good, and you want to protect yourself, buy a little Bitcoin, buy a little gold, and keep some cash to be ready. It's not a bad thing. Like, everybody's worried, and you hear everybody in our space talk about, oh, it's a melting ice cube, it's a melting. Yes, it is. It is. But, you put it in Snap and you'll lose 30-40% in a day. You put it in Facebook. I mean, you've seen what happened to Netflix. I mean, these companies are getting destroyed. Even Target and Walmart got absolutely crushed last week. Why? Well, they came out with the estimate that they're going to. Target came out with an estimate that's going to cost them an extra $1 billion for transportation costs that they didn't expect. And that's not sending goods to your house. That's getting the product and the merchandise into their stores, from wherever it's coming, in China or India or wherever it's coming. It takes that much more money to get it there. That's a massive cost. Well, you can't really hide in this market. You can be diversified and ride it out, and I do believe that will be fine, which is what I'm hoping for that long portfolio that I can't do anything about. But it's not bad to have a little bit of cash and get ready for some opportunities as well. And and buying Bitcoin, don't try to time the bottom. Nobody knows where it's going to be. Do I think it's going to be 8,000? No, I don't. I don't think it's going to be. Do I know? No, I don't. I don't know. Do you know? Of course you don't. But so you buy a little bit, you dollar cost average, and you just dollar cost average DCA. You hear that all the time. From here until the end of the year, you decide how much you can spend of your discretionary capital, and you calculate that out. You take that total, you divide it by the rest of the weeks in the year, and you just buy a little bit every single week, and you don't worry about it. And invariably you'll do better if you do that than if you just try to time the bottom and buy it all at once. That's my experience.
That's a great perspective, and this certainly isn't financial advice. I agree with you. I definitely think that, like you mentioned, James, everyone, you have to make sure you're looking at your risk tolerance. Have that conversation with a licensed financial planner, so you can look at all of your assets and liabilities and seeing what works best for you. But I agree. I definitely think that hard asset trio, real estate, gold, Bitcoin, and like you said, having some cash, being prepared, because when it happens, it's not going to be pretty. No one knows when it's going to happen, but it's best to be prepared instead of not being prepared and it just not working the best in your favor. But I really enjoyed this conversation, James. I really appreciate your time, and I did want to just give you the handoff to kind of just share with the audience how can they connect with you, learn more about your newsletter, and even the work that you're doing with Looking Glass Education.
Yeah, Kevin, it's been great. I really appreciate you taking the time. This is great. This is a great channel you got going here, and I hope it just keeps growing. You've got some good guests on here. I saw you had Greg on here, and I'm not as exciting as Greg, but I appreciate you having me on here, and getting a chance to share the message. As far as what I'm doing, I'm working on a lot of different things. I haven't decided exactly where my energy is going to be in the work area, in the professional work area, but I am educating online. So you can find me on Twitter. It's just at James Lavish. I do have that newsletter. It comes out every single Sunday morning. It just takes one complicated concept and it simplifies it into something that's super readable. It's called The Informationist. And then I'm also helping with this, like we talked about, I'm also helping with this Looking Glass platform and the educational platform. If you want a fuller, richer experience and a really easy way to learn about money and all of these concepts that we talk about, go to Looking Glass, sign up. It's totally free. It's awesome. And those guys made something that's really, really cool. So that's a great way to start getting into it, and share it with your friends. That's it, man. But I appreciate it.
Of course, James, and I'll put all of James' information in the show notes with everything with Looking Glass and his newsletter, and also his Twitter page as well. And yes, I'm a big proponent of what they're doing with Looking Glass. There's a lot of great articles on there, everyone. A lot of great free courses to really just understand a lot of the concepts that we talked about. But thank you again so much, James, for coming on, and thank you all for watching, and take care.